2013 has got off to a mixed start in Asia Pacific. In aggregate, the regional economy continues to outpace the rest of the world, and by a significant margin. Some countries, including Indonesia, are growing strongly, while others, mainly those more reliant on exports, are performing below trend. The region's biggest economy, China, saw a moderate growth slow down in Q1. The markets reacted more positively to developments in Japan, the region's second largest economy, where the new government announced massive stimulus measures. The divergence between leasing and investment activity levels continued in the first quarter. Corporate occupiers remain focused on cost savings, and in most office markets the demand for space remains muted compared to the record activity levels of a couple of years ago. In Q1, Beijing saw a marked slowdown in take-up, as did the Australian markets. Underlying demand has been strong in Jakarta and Manila, but take-up has been constrained by low vacancy. 12 months ago, markets were at varying stages of the rental cycle. In line with the slow leasing environment, rental growth has generally weakened in recent quarters. In Q1, Beijing moved beyond 12 o'clock for the first time in 3 years, with a quarterly decline of 4%. Rents have fallen by around 15% since late 2011 in Hong Kong and Singapore, while Sydney and Shanghai have registered modest declines of 1 to 3% from their previous peaks. Jakarta has been the clear regional outperformer, with annual rental growth of 36%. And rents there are almost 150% higher than 4 years ago. Meanwhile, in the retail sector, demand for space across the region continues to be supported by the entry and expansion of international retailers. Rents have continued to increase in most markets over recent quarters, with the strongest growth in Greater China. Investor appetite for commercial property continues to improve, and in Q1 the region notched up investment volumes of $27 billion, a strong year-on-year increase of 26%. Most markets performed well, with Japan leading the way and accounting for 40% of AP volumes. Yields continue to compress across many markets, as relatively buoyant capital markets underpin growth in capital values. In the residential sector, strong price growth has necessitated cooling measures by governments in Hong Kong, China and Singapore. So far, Hong Kong has seen the biggest contraction in volumes, and we expect high-end prices will fall by around 5 to 10% over 2013. For more details on the latest regional trends, please take a look at our Asia Pacific Property Digest, and I look forward to updating you again next quarter.